real estate or stocks? Which is the ultimate investment choice? It's a debate as old as time, with passionate advocates on both sides. Today, we're diving deep into the pros, cons, and key differences between these two popular investment options. By the end, you'll have the knowledge to decide which path aligns best with your financial goals. Let's get started. Let's start with the basics. When you invest in real estate, you're buying physical property, like a house, apartment, or commercial building. It's tangible, something you can see and touch. On the other hand, investing in stocks means buying a piece of a company. It's intangible, existing only on paper or in a digital account. So why do these two asset classes dominate the investment world? Let's find out. Benefits of real estate. Real estate offers unique advantages that have attracted investors for generations. Here's why. Tangibility. Real estate is something you can see, touch, and even live in. This physical aspect gives many investors a sense of security. Rental income. With rental properties, you can earn a steady income stream every month. Suppose you buy a duplex for $300,000 and rent out each unit for $1,200 per month. After expenses like maintenance and mortgage payments, you could pocket $1,000 monthly. That's $12,000 per year. Tax advantages. Real estate offers several tax benefits, including depreciation, mortgage interest deductions, and even opportunities to defer taxes through a 1031 exchange in the US. Leverage with real estate. You can use borrowed money, like a mortgage, to control a large asset with a small down payment. This amplifies your potential returns. Drawbacks of real estate. While real estate is lucrative, it's not without challenges. High initial costs. You'll need a significant amount of capital for down payments, closing costs, and property maintenance. Illiquidity. Unlike stocks, you can't sell real estate quickly. It might take weeks or months to find a buyer. Active management. Real estate often requires hands-on work, whether it's screening tenants, fixing leaky faucets, or dealing with property taxes. Did you know the average American spends about 10% of their life in their home, making it both a financial and emotional investment? Benefits of stocks. Now let's shift gears to stocks. Here's why they're a favorite among investors. Accessibility and low costs. Unlike real estate, you can start investing in stocks with as little as $100. Platforms like Robinhood and E-Trade makes it easy to begin. Liquidity. Stocks are incredibly liquid. You can buy or sell them in seconds during market hours. Diversification. With stocks, you can easily spread your investments across industries, geographies, and even risk levels. Mutual funds and ETFs make diversification even simpler. Historical returns. Over the last century, the US stock market has delivered an average annual return of about 10%, making it a solid choice for long-term wealth building. If you had invested $10,000 in the S&P 500 in 1980, it would be worth over $700,000 today, assuming dividends were reinvested. Drawbacks of stocks. But stocks aren't perfect. Here are some of their downsides. Volatility. Stock prices can swing wildly, often for reasons outside your control. Emotional investing. It's easy to panic during a market crash and sell at the wrong time. No control over the company. When you invest in a company, you're a passive owner. You can't influence its decisions or management. The largest single-day drop in the Dow Jones Industrial Average was 2,997 points on March 16th, 2020 during the COVID-19 pandemic. Now that we've covered the pros and cons, let's compare these investments head to head. When comparing real estate and stocks, it's essential to weigh their characteristics to determine which aligns better with your goals. Real estate typically requires a higher initial investment due to down payments, closing costs, and ongoing maintenance expenses. In contrast, stocks offer a low barrier to entry. You can start investing with as little as $100 through platforms like Robinhood or E-Trade. Liquidity is another key difference. Real estate is relatively illiquid, meaning selling a property can take weeks or even months. Stocks, on the other hand, are highly liquid. You can buy or sell shares almost instantly during market hours. When it comes to income, real estate provides rental income, which can be a stable and predictable cash flow, while stocks offer dividends, though these are not guaranteed and can fluctuate. Risk levels also vary between the two. Real estate is influenced by localized market conditions and requires active management, which can add stress. Stocks are subject to global market volatility, and prices can swing dramatically in response to news, economic shifts, or even investor sentiment. However, diversification is much easier with stocks. You can invest in different industries, sectors, and geographies through mutual funds or ETFs. Real estate diversification, on the other hand, requires owning multiple properties, which demand substantial capital. Ultimately, Ultimately, both options have unique advantages and challenges, making the choice highly dependent on individual preferences, resources, and financial objectives, fun facts, and surprising insights. Here are some fascinating facts to keep you entertained. Global wealth. Real estate is the world's largest asset class, worth over $280 trillion globally, dwarfing stocks and bonds combined. Stock market size. The New York Stock Exchange is the largest in the world, with a market capitalization of over $25 trillion. Historical trivia. The oldest known stock exchange was established in Amsterdam in 1602 by the Dutch East India Company. So which investment is right for you? Here's a quick guide. Invest in real estate if you have significant upfront capital, you prefer tangible assets, you're looking for long-term, stable income. Invest in stocks if you want a low-cost entry point, you need liquidity and flexibility, you're focused on long-term growth and diversification. Why not do both? Many investors diversify by holding both real estate and stocks in their portfolio, balancing risk and reward. At the end of the day, the choice between real estate and stocks depends on your financial goals, risk tolerance, and lifestyle. Both asset classes have the potential to grow your wealth, but they do so in different ways. Want stability? Go for real estate. Craving flexibility? Stocks might be your best bet. Now it's your turn. What do you think is the better investment? Real estate or stocks? Let us know in the comments below. Don't forget to like, subscribe, and hit the bell icon for more financial insights. Thanks for watching and happy investing.